If you woke up tomorrow with $1 billion, your first instinct would probably be to put it in a bank, buy some public stocks, or grab basic real estate, and you would be calculating it entirely wrong. The ultra-wealthy do not think in terms of traditional savings. They divide their capital into 3 specific parking spots, each engineered for a distinct purpose. The first is liquidity. If you hold $500 million in commercial real estate, your net worth looks incredible on paper. But if you wake up tomorrow and need $200 million in ready cash to buy out a distressed competitor, you are stuck. You cannot liquidate half a skyscraper overnight. This split-screen chart shows exactly why normal banking fails at scale. On the left side of the chart, data from late 2025 shows the average U.S. savings account paid a 0.4% yield. $1 billion parked there generates just $4 million a year. Now look at the right side of the chart. That exact same $1 billion parked in short-term government treasuries, yielding 4%, prints $40 million. That is a $36 million swing every single year, simply by choosing the right parking spot. The first vault is not for long-term equity growth. Its only job is to protect your cash from inflation and keep it instantly accessible when a high-upside deal presents itself. To capture those safe yields, elite wealth builders rely on U.S. Treasuries. You lend your cash directly to the government, and they agree to pay it back with fixed interest after a set duration, usually 3 to 12 months. While private corporations can default, the U.S. Treasury holds a unique defense, the legal authority to print the very currency it owes. This makes a default on its own debt virtually impossible. But executing individual treasury auctions, tracking dozens of varying maturity dates, and constantly reinvesting capital becomes tedious when you are moving hundreds of millions of dollars at once. To eliminate that operational friction, billionaires use money market funds. Professional fund managers pool massive amounts of elite capital together to buy those short-term debt instruments at an institutional scale. Treasuries give you direct, hands-on control of your cash, while money market funds offer plug-and-play convenience. Both keep your capital secure, growing, and fully armed for deployment. While a calculated fraction of their net worth stays highly liquid, the vast majority moves to the second slot, the permanent vault. The objective here switches from speed to multi-generational protection. Capital placed here is engineered to survive the external forces that erode wealth. That includes aggressive estate taxes, personal lawsuits, market recessions, and the reckless spending habits of future heirs. The core tool required to run this fortress is a family office. Founders like Jeff Bezos and Elon Musk use these private, dedicated corporate entities to handle all the complex legal structures and tax planning for their individual bloodlines. Inside that office, they set up irrevocable trusts. To protect the assets, the founders surrenders personal ownership to a rigid legal rulebook. Because they no longer own the money, it cannot be seized in a personal lawsuit or taken by estate taxes. The heirs can receive specific payouts for top-tier education or starting a business, but they lack the structural authority to break the system apart. The legal framework outlives the creator, ensuring the fortune survives the chaos of blood relations. To fill this vault, the ultra-rich acquire assets they intend to hold forever. This means keeping permanent equity inside dominant corporations, operating exactly like Warren Buffett's structure with Berkshire Hathaway. They also park tens of millions of dollars into high-value collectibles. The public views fine art as a luxury, but the top 1% use pieces like this Picasso as a strategic, portable store of value. These timeless masterpieces do not require daily management or a corporate board. They appreciate quietly over decades, allowing massive amounts of wealth to be literally hung on a wall. By combining permanent corporate equity, prime historic real estate, and art, the permanent vault acts as a self-sustaining wealth machine that scales independent of a founder's active labor. But elite operators must still calculate for the worst-case scenario. When central banks print currencies into heavy inflation, or public stock exchanges threaten to collapse, paper wealth can evaporate overnight. That is when capital moves into the third parking spot, the bunker. This vault is purely defensive. It is engineered to survive systemic volatility without relying on any centralized financial institution. Farmland is the ultimate financial moat. No matter how digital the global economy becomes, Human biology requires constant food and water. This raw acreage generates steady cash flow through agricultural leases and crop yields. The exact same logic applies to timberland. Trees grow continuously, ignoring Wall Street's daily fluctuations. It provides a self-renewing biological asset that can be harvested for construction materials or energy biomass. Billionaires are buying up American soil because it functions like a permanent money tree. Since it produces the food society requires to exist, its value is anchored to human biology rather than market sentiment. Think of the global economy like a high-stakes game of Monopoly. You can stack as much paper cash as you want, but if an external crisis flips the board, that currency instantly means nothing. The only metrics that retain their value are the physical houses and hotels bolted to the board. Stocks and cash are just government promises, but hard assets and resource-rich land are the board itself. This dashboard is the exact allocation formula of the world's most successful operators. They maintain liquidity for speed, build unyielding legal trusts for permanent legacy, and accumulate hard land to guarantee survival. But knowing the framework is useless without execution. Hit the subscribe button right now, secure your digital and physical perimeters, and type the word QUIET in the comments below to prove you are ready to start building like an architect. True wealth creation is the systematic construction of structural resilience, a portfolio designed to command power for 100 years. Keep building.